When a multinational decides to insure its global operations through a single local policy, it thinks it's simplifying the process. In reality, it's creating an invisible risk. My name is Gabriela van Oorschot. I lead the international practice at Oneglobal, and today I want to show you what is truly at stake when your risk management crosses borders. Companies operating in multiple countries face three major challenges that are rarely discussed openly. First, regulatory compliance. Every country has its own rules. Insurance issued outside local jurisdictions can generate fines, restrictions, and at the worst moment, deny a claim payment. Second, covering gaps. A master policy cannot see what happens day to day within its subsidiaries. At this exact moment is where risks slip through. Third, fragmentation. When each unit buys insurance locally without centralized coordination, it loses consistency and cost efficiency. The most efficient structure for global risk management today is the master plus local. A master policy issued at headquarters combined with local policies in each operating country. This structure ensures consistent coverage wherever the risk occurs. And in the event of a claim, you do not depend on a local policy issued without capacity to pay. At Oneglobal, we work with certified local partners in the markets to grant all your worldwide operations is all being well covered and serviced with the same level of protocols. Because being global is not about having an office everywhere, it's about understanding what each place demands. There's a point company only notices when it's too late. Managing claims in a global context is completely different. A claim in a country with restricted admitted insurance may block the local payments, meaning the subsidiary is left without financial support at the worst possible moment. The difference between a good international program isn't only the coverage you buy, but who sits beside you when a claim happens. At that point, it requires partners with local knowledge, legal expertise, and the ability to act quickly. That's exactly what we do. The global business environment has become more complex and will continue to be intensified. See examples: climate risks, geopolitical tensions, and constantly changes in regulations within each country. A risk management operation only with local teams is playing a global game with an incomplete map. At Oneglobal, our vision is simple. The client must be at the center of everything. That means not only offering the best possible coverage, but understanding their business, their operations, and their countries. Because international insurance, when placed correctly, is not a cost, it's a competitive advantage. So, if your company operates in more than one country or is planning to expand, it's worth having a conversation about insurance program before a claim forces you to. I'm here for that. Talk to me, and it will be a pleasure to help. Thank you.